Hey, this is Sasha Evdokov, founder of TradersFly.com and InvestingHelpDesk.com, here to answer a few of your common questions about trading, investing, and the stock market. Now, this week's question is there any way that we can predict earnings? See, earnings come a handful of times per year, and they really whip around the stock. So it would be great if we could predict earnings or know which way the stock is moving. And here's some insight for you. When you look at earnings or trading through earnings, normally I don't recommend you trade through earnings unless you plan to hold a stock for multiple quarters or even years. Just because earnings are good or bad, this does not always mean the outcome for the stock is the same for the next quarter. So for example, what I mean here is when you have good earnings, even if you believe you have an advantage when it comes to the earnings report, this does not mean that the stock will react favorably. And the inverse is true, is if you have bad earnings, sometimes when a stock releases bad earnings, the stock can move up, in fact, due to the demand or the future outlook that they project for the next quarter based on some of the new products that they could be announcing. So it's always important that you understand that just because a company has good or bad earnings, that does not mean that the stock's going to go up or down. Good earnings does not mean up, and bad earnings does not mean down. So when you're trading earnings, if by chance you happen to be in a safe position by the time earnings come around, even then it would be wise to take 80% to 90% off the table to reduce your risk. So what I mean by this is, for example, let's just say you've been in a stock for 6 months or 3 months or 1 month, and that stock exploded and you still maybe have not had earnings yet. So if you had 1,000 shares, you could take 700 shares off because you're already at such a profitable position, and then let the remaining shares ride if you believe you have an advantage through earnings or if the company has been doing fantastically well. And in that case, you could, risk a little bit of those remaining profits through earnings. But in general, if you're a new trader, if you're just getting started, if you're a beginner, trading through earnings can be very dangerous. It's one of those things that'll make your stomach churn unless you're really just holding that stock for multiple years to come. Otherwise, the way to trade it would be that if that stock already moves so far and then you have earnings coming up, then you still take 80-90% off the table and maybe let 10% ride. But in general, I would recommend get out before the earnings report so that way, you have a peace of mind because you can always get back into the stock later. Don't play a guessing game with your hard-earned money because that's, in the end, what earnings, trading, or playing is all about. It's a guessing game. It's almost like gambling when you're trading earnings. Again, unless you're holding it for multiple years to come because you're invested in the company for the long term. But if you're a trader who trades within 3 months, 6 months, if you have, 3 weeks that you hold a position, then by all means you need to be out of those earnings because you just don't have enough profits and your outlook for the stock is a lot smaller in terms of the time frame. Let's take a look at some charts and see how this plays out in certain stocks. So here, for example, as we look through Netflix, you can see probably where some of those earnings reports are. So if I look at Netflix right here, you could see that right here there was an earnings report. So even though the stock was climbing to the upside, we had an upside move, the earnings report right here came out. And even though I can't remember if earnings were good or bad, I know that between this one and this earnings right here, the earnings were okay and pretty good. But the reason that this stock went down, if it was either this one or this one right here, was actually because due to subscriber growth. But earnings were fine. There was nothing wrong with the earnings, but it's due to the subscriber growth that they projected. So just because earnings were good doesn't mean that stock is going to go up favorably. Also, it depends on how far that run has come. So if you look at the overall picture, you can see the stock has been moving in quite an upward fashion, and maybe it's overextended. So even if earnings are great, people at these high valuations all the way over here at this level are already saying, well, this stock is probably a little bit stretched. And if it's a bit stretched, then the earnings need to be really explosive to justify this high price. For example, if you pay premium price for a car, premium price for a camera, you want a premium product. So the same thing here. If in order for that stock to continue moving to the upside, even further to, let's say, the 150 level or even higher, you need those earnings to be explosive to justify even higher prices. But because we're so far advanced already, the earnings, no matter how good they are, if they're just decent, it may pull the stock down. Not always the case, but sometimes that happens. The same thing here. If you look at WYNN, I like this example. So you can see that here, if we do a stair-step pattern, you can almost see where those earnings are. And sometimes if you take a look, you'll be able to see the earnings areas. So for example, these gap downs are typically earnings plays, like this one right here. That's an earnings play. If you take a look at Apple, the same thing. You can see right off the bat where there's some struggle or problems within the company right here. This potentially could have been earnings. I don't think it was, but right here, there was earnings. Okay, so looking at it, the company overall is very well liked and very favorable in the community, but just because it's Apple doesn't mean that it's going to continue moving higher, because already if you look at the pattern and the extension, I've talked about this one before multiple times. We have an A to B, okay, and then from B to C, and then a C to D. We're already overextended. So a little pullback, even if it's just to this B level, right around this price level, and if we bounce here, that's still fine. At least the pullback is in session, but because the stock is already extended, to justify higher prices at those multiples and at those price points, it just becomes a little bit stretched. So it's important for you to realize that even if earnings are good, that doesn't mean the stock will continue moving forward. And if earnings are bad, that doesn't mean the stock will sell off, because there's a lot of other factors that traders look at between potentials for the future, between the international markets, between the currency problems that the company is having, and some headwinds and other problems that could come about in the future for that stock. So as far as trading this goes, if you've been in, let's just say Netflix here, and we take Netflix, if you were in Netflix, the way that I would trade this, and let's say you were holding it for quite a while, or let's just say you had a little run up right here, if you've been Netflix for quite a while and you have earnings coming up sometime in this area, then you get out of that stock right there, 80 to 90%, and you could take a chance. And if you look at it like this, if we go more into the daily factor, so here, if you were fortunate enough in Netflix to buy it at the lows, okay, so we're here, we buy it at the lows, and that stock moved up on you right here. It moved in your favor. Okay, so you were maybe in the trade maybe less than a month. So when you were up at those high price levels right around here and you have earnings coming out, this is why you sell 80 to 90% of your shares, because you don't know if it's coming back right here to where you got into the stock. Okay, even if you got in it right here, you don't know where that stock is coming back. So as you climb this upward motion, if you were able to value buy it, you take a little bit off, you take another 10% or 50% off or 30% off. And by the time you get to earnings, because this was earnings right there, before that earnings, you're out 80, 90, 95%, even 100% of your shares, because you could always now what it would allow you to do is you got back in again at this price level. So why not? You're getting back in at the same price point that you were in earlier. So that's what you want to do, because and the same applies right here. Take a look. When you come back right here to this price point, again, if you got in somewhere around this price point at this support bar, stock climbs higher. You take a little off at this price level. Stock climbs higher. You take a little off. Before earnings, you get out completely. okay? And then it would allow you to buy more shares around this price level. And then again, you could wait and base it and get more back where you were at this price point, at around this $87, and buy a little more, and then it bounces, and then again, you get out a little bit, and then continue following the trend. Now here you didn't have earnings. There was no earnings at this price point, but that's what you're doing is if you have earnings coming around the corner like this one, or even like this one over here, then take 80-90% of your shares off if you've already been profitable, and probably 100% of your shares, because you could always get back into the stock at a cheaper price. So thanks for joining me in this video. If you'd like to see more videos, questions, and answers like this one, please visit me at investinghelpdesk.com. And if you'd like to get insight on the newsletters as well as some free training that I have available, click this button right here on screen and you'll be signed up to the newsletter. And that's where I'll release sometimes free books, sometimes free educational material. And that way you can stay up to date to other courses that I'll be releasing in the future. And if you want to see a hidden link to where you can get my critical chart subscription absolutely free as a trial for a few days, then click the blue button right here and you'll be sent to that link right away. Thanks for joining me. In the end, remember to do what you love, contribute to others, but most importantly, live life abundantly. I'll see you next time.